All right, with the futures limit down this morning, we've been turning to ETFs based on the major indices for guidance on where we might open. The S&P 500 ETF, as you can see, down almost 7%. So that might be an indication of what we'll be looking for in about 45 minutes. And look at some of the oil names, like big names like Exxon, down nearly 20%. And that's all reflected in what we're seeing in the averages in the Dow. Many other energy names dropping by more than 30% this morning. Joining us now is Kyle Bass, founder of Hayman Capital Management. Kyle, you have always have a global look at things, and you have areas of the world that are already over-leveraged and very sensitive to something that might happen. Is that where you want to start? Wherever you want to start, you go ahead. We just want to listen to what's on your radar this morning.
Well, good morning. I picked a hell of a morning to come on, but I think that going back to your questions about oil, being here in Texas and knowing a lot of these producers and a lot of the people that move oil around. One thing that the Trump administration has been doing, and what Kushner's job has been caddying around the Middle East, is to get oil prices lower. I think they needed to be careful what they wished for. I think they don't realize that anything below 40 doesn't work, and he definitely achieved his mission in getting oil prices lower. But as we all know, a number of U.S. unconventional or shale production is going to end up bankrupting itself. And the one cure for $25 oil is $25 oil. So it won't stay here for long because none of the producers make any money at these levels. And
then what will the collateral damage be of oil curing its own problem at 25, but in terms of corporate problems and sovereign problems around the world?
Yeah, you think about the sovereign players that benefit from a low oil price, like Japan, China, and any of the others that have very, very few natural resources. And then there are those that are going to be hurt pretty dramatically by oil being at 30 or 20 or wherever it ends up. The regime in Iran is already dealing with the largest existential crisis that it's had with the coronavirus running through the ranks of both the leadership and the rank and file in that population. We think that the extent of what's happening in Iran is being dramatically underreported. And so you have places that are, let's say, not so politically stable are going to go into a state of complete disarray. And I think that's also a problem geopolitically going forward.
Hey, Kyle, maybe a broader question. What do you think is baked into the market right now in terms of how bad things get here in the United States and elsewhere?
And as they relate to the virus?
As they relate to the virus. That's what I think we're all trying to understand this morning. What the market is actually expecting versus what could happen, both, by the way, on the downside and perhaps even on the upside, hopefully.
Yeah, I mean, as we all know, this too shall pass. It's our view at our firm that the summer months will end up burning the virus, burning it down to where we see a decline in new cases once we finally get the cases tested. Number one, I can't believe that we don't have testing stations in every major city in the country. That should be an open and close issue, like a canned approach to any kind of pandemic, and that's something our country should develop. But as far as what is factored into the market today, you see European markets down anywhere from 7 to 9%. Our futures are locked down 5. I think that our market has a lot of this virus factored in. When you look at where airline stocks are trading, when you look at cruise stocks or cruise liners, when you look at anything that has a large public presence like theme parks, you already have a pretty significant recession priced into these stocks. So anything better, any turn in the number of infections once we get everyone tested is going to be a very positive event. I guess the question that we must have is how many of these companies have enough cash to make it through that divide, and some of them do, some of them don't. But there will be some amazing things to purchase on the back end of this. We as a firm hope, and we as a country hope, that we don't see a resurgence of the virus in the fall, because as we all know, the thing that worries me the most about this is there are only about 940,000 hospital beds in the U.S. At any moment in time, there's 600,000 of them being used. There's 340 million people in the U.S. We can't have any kind of significant infection with any kind of acuity here without having real problems with the number of those that need to be hospitalized.
Hey, Kyle, you said that there would be big bargains to be had at the end of this. Are you buying anything today?
I agree with some of your earlier guests who I couldn't see. I do think it's too early. I think that we haven't gotten around to even the first round of testing in the U.S. You have a number of cities that immediately declared states of emergency that really don't have any significant confirmed cases. I think you're going to see the ranks of the U.S. start to put up, a few thousand confirmed cases right away, and that's just because we're behind on testing. So I think peak virus, if you're asking for when the financial markets see peak virus, I think it'll be about a month from now.
So, Kyle, does that mean that you are selling into this?
I'm definitely not selling into this, but we are. Look, there are a few companies out there that are going to do really well on the back of this. I'll give you one example. Six Flags is a theme park company, and these companies are heavy in real estate. They have great operations around the country, but it's just like an airline, you can't have revenue disappear when you have such a large installed fixed cost base. So those companies are going to be the most convex on the way down. They're also going to be the most interesting value plays once we see peak virus infection rates.
But if you think there's a month to go, what are you doing between now and then?
Watch one of the most interesting financial collapses that we've seen, right, in the last 15, 20 years. This isn't 2008, right? Our banks aren't going broke, but there will be places around the world that never recapitalized in the last crash. You think about Europe, the ECB never recapitalized the European banks. So if you look at where European banks are trading today and where they will be in the next 6 to 12 months, Europe's going to have a real problem. Italy, their banks are basically going to become insolvent very quickly. Italy's got north of 130% debt to GDP, and they have no capital in their banks. And so what's happening in Italy could be the knockout punch for Italy, i.e., either we're going to see a default within the Eurozone in Italy, or we're going to have to see the Germans.
I'm sorry, go ahead. Finish that thought, but they're wrapping me. I want to ask you just one more thing after you finish your thought. That's why I was interrupting, but finish your thought. Germany.
Yeah, sure. So I think places like Germany will have to change the capital key, and Italy, ECB is going to have to go in and really help Italy and let them expand. And then the other economy at risk is Hong Kong, the most levered developed
economy now we're in the area I wanted to ask you about. So China, we've had you on many times talking about the trade war. What does this throw into the entire mix? Do you believe the numbers that you're hearing from China? Did they handle this and cap it? Should they be reopening the factories and theme parks and everything else at this point? Do you believe the numbers?
Yeah, what you learn about the Chinese Communist Party is they don't care about their people as much as they care about maintaining power. And I think they know that if their economy stays too low for too long, that it's a crisis for leadership from a power perspective. So they're telling people to go back to work entirely too early. And no one believes any of the numbers coming out of China. And it's interesting, right? The first thing the Chinese government did was they arrested the 7 doctors in Wuhan that found this virus in the first place late last year. They not only arrested them, they forced them to issue an apology, and then they, quote, punished them. God only knows what they did to them when they punished them. And somehow the WHO is lauding China for doing the right thing and taking charge of this virus when all China did was do a major cover-up for God knows how long. So I don't believe any of the numbers out of China, but what's most important is China's banking system is 3.5 times its GDP. Hong Kong's banking system is almost 900% of GDP, and their economy is off. So you've got what we're going to see is something worse than the 1998 Asian crisis over in Southeast Asia, and I think the epicenter will be China and Hong Kong.
Okay. That's what I want to get to.
Thank you, Kyle.